YouTubers, Mike Martin's here, Mike Martin's channel. Let's spare a little bit of grief for our friends down in Australia, especially this ongoing housing crisis they've been bombarded for years now, and I've been covering it for years too, covering Australia for many years now. With the amount of underlying Mickey Mouse things that the government or the bank or the media comes up with over the years is far more than entertaining. It is better than what do you call it, reality TV. But the sad part is it's destroying people's lives. It's ruining people's lives. The middle class that doesn't know what they're headed for. A lot of the people that have worked hard to make a down payment of the whole FOMO. A lot that did buy in are in a lot of trouble. A lot of people with finance only coming up and have to restructure their mortgages. The people that are underwater because their properties are worth less than what they bought them for. There's a lot of problems, guys, and a lot of Australians were brainwashed, and a lot of people went in believing their brokers, believing their banks, believing their institutions, believing their real estate agents, because it's their job to give you the right information. It's their job to give you the right product. It's their job to make sure you're taken care of. But most people, got the product, got secured, got what they wanted, but now they're paying for it in the rears now because that wasn't the right fit for them. And it takes usually people that buy homes anywhere from 6 months to 2 years to find out whether or not they could comfortably pay. And a lot of people sitting in that chair are always like, I can comfortably pay this every month when you're signing. And then 6 months go down, it's like, damn, you know what? I haven't eaten in 3 days. So here goes. Now, house prices crash by 50%. RBA launches $300 billion bank rescue in outrageous forecast. Is the forecast outrageous, or is it credible? With the lack of people, the lack of securing financing, the lack of all this stress testing, and now the most importantly, is China putting restraints on its capital outflows. That's the most important one. Has pretty much held Australian homeowners hostage right now. So this is it. The Reserve Bank could be forced to step in with $300 billion bailout program to rescue Australia's banks if the housing credit crunch accelerates into a drop loop. Oh, it's called a drop loop. I thought it was called a crash. That causes property prices to crash. There we go. 50%, plunging the country into a recession. It shouldn't. You know why? Because you're not supposed to back housing on the economy and student loans and credit cards and all that other crap that shouldn't be in an economy. It should be exports, fabrication, mining. A good, true country's wealth is built off exports. That's according to Saxo Bank's latest outrageous prediction report, which outlines a series of unlikely, underappreciated events that could send shockwaves across the financial markets if they were to occur. This is not an official forecast. It's an outrageous forecast that could happen if certain factors were to fall in line, but something we put maybe in the 1% probability on, said Sydney-based Saxo Bank market strategist Eleanor. It's the first time Australia has feared in the Danish Investment Bank's annual list, which this year includes scenarios like Apple snapping up Tesla per share, or a solar flare striking Earth. They call those EMPs, right? Or EMPs, or getting hit from an EMP, right? Wiping out satellites, causing $52 trillion worth of damage. The Australian dream was financed through the epic accumulation of debt, as interest rates collapsed, with household debt soaring 189% of disposable income. So here's the deal, guys. That's a lot. That's the highest in the world. The greatest financial crisis was responsible for deflating housing bubbles in other advanced economies, but not in Australia. So if you follow my channel, you know what I'm talking about. In a bid to save off the crisis effects, Canberra's economic security package further fueled the speculator run-up in the leverage, kicking the proverbial can down the road. In 2019, the curtains close on Australia's property binge in catastrophic shutdown, driven most prominently by plummeting credit growth. In the aftermath, the Royal Commission, all that is left of the bank is a frozen lending business and an over-leveraged, overvalued mortgage-backed property ledger, and banks forced to further tighten screws in lending. Yeah, and the Royal Commission, they mentioned that, Royal Commission, they mentioned that. So the Royal Commission's in there, and man, what's happening? Everyone throwing everyone else under the bus. No one takes the blame! No one can stand up and say, you know what, I screwed this up. What do we do to fix it now? I'm sorry, let's buy back some of these mortgages for some of these people, or let's slash, or let's give back a 30% incentive on all properties, or let's pay back X amount of the mortgage so that their TDS or the total debt service ratio now fits to legal standards because we fudged their income numbers. There you go. The confluence of dramatic restrictions in credit growth, oversupply of government, filibusters, and slowdown in global growth cement the doom loop, property prices crashing 50%. Australia falls into recession for the first time in 27 years as a plunge of property prices destroy household wealth and consumer spending. That bust also contributes to a sharp decline in residential investment. GDP tumbles. The blowout in the bad debt squeeze margins to crater profits. Yeah, the craters. The bank's exposure is too great for them to cover independently and to skirt the risk of insolvencies and collapse. The RBA moves in a purchase, securitize mortgages, and fund the government's recapitalization of major banks of a whopping $300 billion. It's called the QE, quantitative easing, / TARP. That stands for Together Australia Reform Party. I'm joking. I don't know what that means. I know QE means quantitative easing. The grand irony is the government Lowe's hand is forced toward unconventional monetary policy and implements of the QE1 down under. With the banks at the forefront of financial stability, they are deemed too big to fail, at least because Australia's baby boomers and superannuation investment pools relies heavily on banks consistent of dividend yields. There's the information supplied by her. Ms. Cray said a report, the U.S. Federal Reserve's first round of quantitative easing, known as QE1, unleashed during the 2008 financial crisis, and the U.S. $700 billion bank bailout, dubbed by the Troubled Asset Relief Program, would be ironic. Governor Lowe has never been proponents of low interest rates policies. She said he's made it quite clear. He will only cut rates, worst case scenario, and a lot of his academic work is on need for higher interest rates to deflate asset bubbles. But that's exactly how you deflate an asset bubble. We'll be covering that on my channel forever now. But here's the deal, guys. The currency will be crushed. Australia's currency will take a big beating. against other currencies the second it starts deflating its currency rate. We got a tiny problem, guys, and I'll explain to you why. Well, it's not a tiny problem. I think it's a bigger problem than a lot of people could imagine. Do you know who's going to end up paying for this? Pensions will be wiped. A lot of pensions will be cut, and a lot of the people that did not buy into this housing craziness at housing parties, and people are like, oh yeah, I'm looking at buying a house here. Yeah, we're looking at doing this. We're sending in an inspector. We're going to go get it approved. And all these people at parties. And then there's a whole section of people at the party in the corner that don't buy and don't own because they're not spending $2 million on a bungalow. So now those people that didn't spend the $2 million on the bungalow and waiting on the sidelines and saving their money patiently and doing other things with their time, guess what? It's them that's going to have to pay for this mess. Someone's going to have to clean up this party. And it's going to be the taxpayers and obviously the taxpayers, but a majority of the people who did not buy into this shenanigans are the ones that are going to be paying, either through their pensions, either in tax rate hikes, either in implosions in the bank where the government basically goes into your bank account, or the bank's government goes into the common investor or common person's bank account and remove money to settle their debts. And yeah, I'm just putting this out there for you guys, because you're going to see a lot of banks. If the government doesn't get involved, then you're going to see banks go insolvent, which should happen. Which legally, that's their problem, right? Banks should go insolvent, right? And then everybody's deposits should be covered. Remember, it's fractional reserve. They're only lending 10-1, so they should have depositors' money at least to give them back, the hardworking people. So the signs are everywhere. We think 2019 will mark a profound pivot away from this mentality as we are reaching the end of the road in piling on new debts. The next year we'll see us all beginning to pay the piper for earned ways. If some of the report's predictions come true, we might finally see a healthy shift towards the less leveraged society with less focus on short-term gains and growth and new focus on productivity. Yeah, homes should be just an asset, something you buy, something you hold on to, something you kind of leave for your kids, something you use to raise a family. That's what I'm doing with my family. Follow my channel if you haven't. I'm raising my family. We have our fourth child on the way, and we're excited about that. And what are we doing? We're living the Canadian dream, the proper Canadian dream, right? The dream of expanding, the dream of family, the dream of security, the dream of, but it's all done affordably. We've done everything affordably. I left the big city, a 2.5-hour drive from the city of Vancouver. I live in a small town called Merritt, and I sold my company on the coast. I sold everything. I reopened here, and now I'm enjoying. I bought a house for next to nothing. And now I'm enjoying the disposable income, enjoying the fruits of my labor, enjoying the time with the family. So, a lot of Australians did leave Sydney and Melbourne. A lot of them went to Hobart and stuff and other parts of Australia, West Australia. So we'll see what happens, guys. I really, 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 really feel for the people that didn't get into this mess, because it looks like they're going to have to clean it up too. Let me know what you guys think in the comments below. Thanks for watching, guys. And don't forget, just follow me on my adventures. Thanks for watching.